Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1619 AN. Today's date is July 19th, 2018, and the title of the episode is, This is How the Central Banks Are Covering Up the Next Collapse. Let's get into the economic collapse financial news. Now, as we know, the central bankers, they are very worried about cryptocurrency, even though they're trying to make it seem like it's not that big of a deal, how cryptocurrency cannot be a replacement for their fiat system. Well, this is where they're wrong. And we can see already from what has been going on and what they've been trying to do is that they're very, very nervous about this whole entire blockchain system. Now, what's very interesting, the central bankers continually made the case, that criminals use cryptocurrencies, terrorists use cryptocurrencies, and they kept on pushing that to demonize cryptocurrency. And they kept on saying it was very volatile because there's nothing backing it, and it's moving up and down. And of course, this was created to make everyone believe that there were problems with cryptocurrency. And they were saying, look at the dollar, it's so solid. The dollar is what people should be using, not cryptocurrency. But of course, as we know, the dollar has lost 96, 97% of its value since the central bankers put it into place, because as we know, they loan their fiat currency out to governments with interest attached. When you create cryptocurrency, there is no interest, and it's decentralized compared to centralized. So what did they have to do to get everyone into their own cryptocurrency? Because this is exactly what they're going to do, and they're going to make you think that all the others are a waste. You can't use them. Criminals use them. They're volatile, and they're not secure. They're not centralized. So they need to create their own cryptocurrency. And we know there's a couple banks that have been working on this. And we find out that IBM right now is experimenting with a new cryptocurrency that is directly tied to the US dollar. And of course, this is all about keeping the cryptocurrency stable, and they're going to be using the dollar to do this. And the tech giant, they're partnering with a startup called Stronghold to launch a stable coin, which will serve as a tokenized representation of the US dollar. Now, I wouldn't be surprised if the central banks get involved in this, and once they develop it, they start to use this to show that, look, we have a cryptocurrency. This is going to be the one. And again, their next step would be to have governments say this is the official cryptocurrency. And this is what the central bankers have been all about: controlling the currency, creating a currency and saying all others are not worth it. You shouldn't be using them. Only use ours. So we'll have to see how this plays out. But once again, cryptocurrency without central bank control is fantastic. And if you want to know more about cryptocurrency, you know nothing about it, you can type this link in, x22reportschool.com, or if you come to the x22report.com site, there's banners on there and you can click on it. Now, there are two parts to the website when you get to this. One part is the school. The other part is the trading room, where you can watch professional traders trade cryptocurrencies. You can mimic what they do. Again, it's an entertainment room, but there's also a school where you can learn about cryptocurrencies. Yes, it does cost money. So you can go over to that site. It's a separate site from X22 Report, and you can take a look at that. Now, we know that the establishment, the central bankers, they do not want anyone leaving their system. We've said this over and over and over. And now in the UK, we see already the central bankers, they are pushing their narrative. And their narrative always goes something like this. If you try to leave the central banking establishment, they tell you that your economy is going to implode. You will not be able to survive. It will not work. And this is exactly what is happening. The IMF right now is saying a no-deal Brexit scenario would affect the British economy much more than the EU. So the British economy will get hurt, the EU will not. And how did they come to find this information out, and how do they know this? Well, the IMF did some fresh research, and they figured it all out, and they said, yeah, if this happens, the central bankers won't get hurt. It will be the people of the UK, because what will the central bankers do? They will put a lot of pressure on the UK if this does happen. And this is the same story that they always use. They always tell you how bad it's going to be. Actually, if we got rid of the central banking system, we got rid of the central bankers creating the currency and attaching interest to their currency and letting the governments borrow it, well, our lives would be a lot easier because we wouldn't be enslaved to the central banks. We wouldn't have to be paying the taxes that we're paying to pay for the interest, and everything would be a lot easier. Remember, what they do is not for the benefit of the people. What they do, the central bankers, is the benefit for themselves, to make themselves wealthier, to make themselves have more and the people have less. Now, what we see happening here in the United States, not just the United States, but globally, we see the central bankers, they are now pushing their narrative. They're letting us know that things are starting to slow, that the trade wars, it's going to affect the economy globally. The mainstream media is out there saying that the economy is not as strong as Trump thinks it is. We're going to be heading into a recession. And remember, we've been following the economy for a very long time. We know it's a gigantic illusion. We know it's completely fake, phony, and false. We know that the numbers that they're throwing at us have never been real, and now the Fed is hiding some of their data. But what's very interesting is the initial jobless claims in last week tumbled to around 207,000. Now, this is the lowest level of claims since November 1969. And if you look at this and you go back in time, into the 70s, into the 80s, into the 90s, 2001, 2008, every time initial jobless claims plunged to very, very low levels, we enter a recession. Well, we're way below where we were for each of these recessions in the past. And every time we hit a certain period of time, all of a sudden, we enter a recession. Now, what's very interesting is they're telling us that we're at, pretty much full employment. Whenever we see this, normally wages move up because supply and demand. And we see there are companies that are trying to get people in there. Well, guess what happens? They say, listen, we'll pay you more to come to us. What they're saying is there's a shortage of workers. And we don't see this. We don't see any of this, which is very odd in itself because, remember, when you're using fake numbers, things don't make sense. And this is what we're seeing. We see Venezuela right now. They will refine their gold in Turkey to protect their reserves from the U.S. sanctions. And they're giving it to a country that they trust, where they're going to avoid the U.S. sanctions. And again, gold is real money. Gold is your insurance policy. And these countries know this. Countries around the world know this. The central banks know this. And what the central banks do is they try to convince you otherwise that, no, gold is not real money. You really don't need it. And this is why here in the United States, people really don't own that much gold. Yes, they have jewelry, but they really don't have their insurance policy in place where they have gold, where they can protect against a fiat system completely imploding on itself. Now, like we said, the IMF is out there telling us that growth is starting to slow, and now they're naming certain areas. They're saying growth is slowing in Japan, it's slowing in the Eurozone, it's slowing in some Asian economies, and they're giving percentages of how the economy is shrinking. They're saying, in the U.S. it's going to shrink by 8.8%. In China and other emerging economies, it's going to drop 0.7%. Japan is 0.6%. And they're building the narrative right now to let us know that everything is starting to fall apart. And of course, what they're doing is they're building this up and they're going to cover up what they're about to do. Now, we talked about how the central bank, the Fed, has been hiding a lot of their data or changing their data to fit their narrative. Now, when we look at the stock market is not tracking the news headlines. And from everything that we see, the stock market doesn't move with really news. Yes, it moves with rumors, but real business news, that's not how the stock market is moving right now. And the past month should have proved this if there were any type of doubt at all. It is hard for investors and some analysts to grasp this fact, primarily because for at least the past few years, it appeared as though stock markets were utterly dictated by headlines out of Bloomberg, Reuters, and other mainstream media outlets. Once investors and analysts became used to this narrative, it was difficult for them to adapt when the dynamic changed. They are still living in the past based on an assumption that was never quite correct to begin with. In reality, headlines never actually dictated the stock prices. It was always the Federal Reserve among other central banks. Stock market valuations for the past several years have tracked almost perfectly with the Fed's balance sheet. That is to say, every time the Fed purchased more assets and they increased their balance sheet, stocks went up. Now we know that they're unwinding their balance sheet and they're raising rates at the same time, which means yields on bonds are becoming competing assets, luring investors away from stocks once more. It's important to note that the Fed is not the only central bank that is raising interest rates. The Bank of Canada, the Bank of England, they are also pushing rates higher. Now, we also know that the Fed has been the single most important trigger for the stock markets, and we know there are other central banks that have been buying tech stocks and whatnot to push the stock market up. Now, if we go back in time to 2012, Jerome Powell, the current chairman of the Fed, said the following, that essentially there will be a stock market crash if the Fed raised rates. Now, this is very interesting because what he's doing right now is exactly what he predicted back in 2012, which he warned about. So, back in 2012, Chairman Fed Powell told us that the stock market would crash if interest rates are raised. We also know that the Fed has been hiding certain data like their balance sheet. They've been changing how the yield curve was created, and they discontinued other types of data. Now, when we look at this, what are they trying to do here? Well, the Fed is not attempting to hide the size of its asset dumps. I think they're trying to hide when they actually do it, their timing of when they cut. Because when you look at the stock market and you look at the central bank's balance sheet, it went up at the same time. And they're very closely linked. Now, when the central bank, the Fed, decides to cut the balance sheet, you will see the stock market come down in the same exact way. Now, if you don't know when they're cutting because they got rid of that data, guess what? They can hide what they're doing and no one will make the correlation of this is what they're doing and they're discontinuing that graph. So this is very interesting. Now, with the yield curve, they're attempting to change the way it's reported because they don't want people to predict when this recession is coming. Because we know in the past it's been a very accurate indicator of when the recession will take place. So when we look at this, we can see that they're changing the yield curve because the Fed knows that the economy now is declining. And they're trying to hide the fact that the economy is declining very rapidly right now as they raise their interest rates, as they cut their balance sheet, and the yield curve is giving us an indicator that something bad is on the horizon. Now, of course, what they're doing is they're using the trade wars as a cover. And they're saying that the trade wars are going to be responsible for when this whole thing comes down. Now, trade wars, they have little to do with the behavior in equities. It is the Federal Reserve and, to some extent, other central banks that are controlling the stock market prices. So when the stock market comes down, it's not the trade wars. It's actually the interest rates. It's actually what the Fed is doing by cutting their balance sheet. And by hiding the yield curve data, by not really hiding it, but by changing it, people won't know when this economic disaster is going to hit. Now, again, the Fed has changed other data or got rid of other data. And what they're doing is they're hiding all of this because they don't want anyone to know what is really going on. And they're setting up their narrative. This is how they're bringing down the entire system. Now, what's very interesting, and we mentioned this before, we know that Andrew Jackson is hanging on the wall in Trump's office. Andrew Jackson got rid of the central bank. And Trump came out and he blasted the Fed and said he is not thrilled about the rising rates. Now, he understands what's going to happen here. And again, we have both sides now competing for the narrative of this economy. And when it comes down, the winner will control the narrative. Trump is out there saying that the strong dollar is disadvantageous, and we see already the White House came out and they tried to cover all this up. The White House says Trump respects the independence of the Fed. The White House says Trump isn't interfering with the Fed's decision. And what is really happening right now is the patriots, Trump, they know exactly what the Fed is doing. They know exactly the plan the central bankers have to bring down this system. They know they're going to bring down the system and turn around and blame it on Trump and the patriots. And we see right now, like we said a couple days ago, Trump was going to come out somehow, some way to point the finger at what the Fed is doing. And this is the beginning stages of this. And we're going to see a lot more of this as we move forward. Because remember, as the Fed begins the takedown of the economy, they're going to do more and more. And Trump and the patriots, they're going to realize this. They're going to understand what they're doing here. And they're going to be calling the Fed out. And sooner or later, they're going to be pointing fingers at the Fed. Because as the economy starts to break down, which we're seeing right now, they're going to have no choice but to say, you know something, the Fed is bringing this down. The Fed is raising the rates. The Fed is doing this, and you're going to see a lot more of this. Just like Trump came out in the beginning stages of saying fake news and started to call people out on certain things, certain reporters, the same thing is going to happen with the central bank. Now, again, we'll have to see how this plays out, but as we know, we are moving towards a period of time where this entire system is going to be coming down. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.